Welcome, everybody, to our Long Verticals and Diagonals webcast. I'm Connie Hill. I'm happy that you would join me here today, and I'm happy to be here. We're in an interesting market time right now, and I'm curious, are you more bullish or are you more bearish? Go ahead, chat that in the chat. We're going to take a look at that today, and we might find some opportunities going both ways in this market here today. Volatility is fairly low, so that kind of favors what? Typically favors buying strategies as opposed to selling strategies. And we talk about two buying strategies in this webcast. Now, I hope you're following me on X. I'm Connie Hill, CS, and I'll post educational content out little nuggets along the way. I'll do a lot of chart type observations that I share with you. We have the pleasure of having good friend of ours, Barb Armstrong, in the chat, fellow coach, very knowledgeable in the strategies that we're talking about here today. She teaches them all the time. She's here to help me maybe field some questions I can't quite get to, but I'll keep my eye on the chat. Barb will as well. And let us know what your questions are. Follow Barb on X as well. She has a lot of good content you don't want to miss. She is Barb Armstrong CS. Now, I did throw out in the chat a link to the playlist for this class. If you want to go back and catch any previous episodes, that is the way to do it. All right, let's go through our disclosures and get on with our class today. We've got a lot of ground to cover. What we talk about today is intended for educational and informational purposes only. Don't consider it a recommendation. With long options, investors may lose 100% of funds invested. That's true with your spreads as well. Long verticals that we talk about in this class. The paper money software application is what we're going to be using here today. It's for educational purposes only. I think it's a fantastic tool as you're testing out rules, testing out strategies. Do it out in a paper environment where it's not going to hurt your account. Past performance is no guarantee of future results. Investing involves risk, including the risk of loss. When we talk about stop losses, typically they have a market order with it as well, and so we don't have a guaranteed price. We just know that we want to get executed at whatever the market rate is at that time. So just be aware there's no guarantee on those market orders. All right. We're going to do a quick announcement. We're going to talk about a little bit about long verticals and diagonals as far as strategically. Anytime we're talking about our trades, we're going to talk about the impact of price, time, and volatility, because those are the things that really influence the price of the stock. And then we're going to be looking at a few examples here today. We need to follow up on a couple of previous trades, and then we'll get into some new opportunities. Now, in terms of where you're kind of feeling things, I asked you if you're feeling a little bit more bullish or a little bit more bearish. And I just scrolled past your comments. Let me get back up to them. So we are seeing maybe neutral to bullish, neutral. I'll hit the right button this time. Bearish, bearish, bearish. Bearish as per the trend. That's what Lakshmi says. Yeah, so maybe we might see opportunities to go both ways in the market. We're going to take a look at both directions here today. I've got several opportunities for us. Now, as far as verticals, long verticals and diagonals go, they're long positions. We're putting out money for these trades. With a vertical, we're working with the same expiration date. We buy an option, more premiums attached to it, and then we sell an option. And that gives us either, a designated max theoretical gain or max theoretical loss. Sometimes it's in between the two, right? The verticals will have the same expiration date. The diagonals, it's a little bit different of an approach, and we're going to use different expiration dates. However, remember, both of them are going to be long. That means they'll be Vega positive. So if implied volatility happens to go up, then that would be beneficial in both of those trades. Okay, let's head over to paper money. Oh, I was going to give you a quick announcement first. Quick announcement is this. If you log into your Schwab account and come over here to learn and then go to coaching, and then you'll be here at our coaching page. And what I wanted to bring you to, let me maybe go back a screen so you can follow it. All right, learn, and then come over to our coaching page. Scroll down to the in-person events, and we've got them listed out there way in advance. How many of you have been to an in-person event and loved it? If so, feel free to say, I loved it in the chat. If you didn't love it, you can say that too, but most people are quite fond of these events. They're free to you as a client of Schwab. And I wanted to tell you, we've got stuff scheduled out here until March of next year. Okay, we're going all across the country, some of the more populated areas where we have lots of clientele. And so if you can get to one of these spots, I know Barb loved them when she was a student. She said she'd go take a plane anywhere just to have a good adventure. Okay, so just take a look at those if you're interested. Just know you can register for them. Click on the Learn More, and that'll help you get there. We're going to be in New York, next big event at the end of the month, and then it'll be until mid-September. Then we will be in Scottsdale for a market drive event, which is a one-day event. It's all day on a Saturday. Okay, so we'd love to see you in there. All right, so those of you that are responding, Sharon loved it. Chris has been to Dallas a few times. Kevin says it's a great time. Ricebird loves it. Jan loves it. Well, you've got some good endorsements here from people that are your peers. All right, so take advantage of that. All right, let's head over to Paper Money. And let's head over here. And I want to start out with a couple of opportunities, a couple of trades that we've been in for a while and kind of how did they finish? Okay. First one is going to be Pepsi. Now we did Pepsi a couple weeks ago. And let me just kind of zoom in on the chart. And I'm going to scrunch the RSI and implied volatility a little bit here so we see a little bit more of the price action. With Pepsi, it had been in a downtrend, and we could see the 10 and the 30 are the moving averages on the screen. The blue is the 10 one, so it will wiggles around more quickly. And we got in right here where that green oval is on this candle. It was looking like it was kind of had come through resistance, and then it looked like it was dropping back down through resistance again. Well, it didn't continue to drop for very much longer. It's kind of like it found some footing back here, some support, and then it just kind of waffled for a while. And then just yesterday, it finally broke through this resistance at a significant amount, and it hit our stop loss. Okay, so all is not lost when we hit a stop loss. We were basing it, our exits based on support and resistance and targets in this case. So we did lose a little bit of money on this trade. We paid $275 for the spread. We got, when it hit us out, here, we'll just pull this up real quick. So we paid $275 for it. When it hit our stop, we got filled at $206. We had, that's a 69-cent deficit on each contract. With 7 contracts, we lost $483 on that particular trade. Now, nobody likes to have a losing trade in there. Okay. However, we'll allow ourselves in this class to lose up to $2,000 per trade. And we position size to that $2,000. So even though we don't like a loss, it wasn't a terrible loss. Okay. It was like, okay, we can take our lumps. We can keep on going. Now, this other trade we've been in a long time, and this is the one that is called, I'm going to pull up the chart here first, was our non-traditional, get rid of extra, let's see, Pen W. Our non-traditional put diagonal. And the reason it was non-traditional is we weren't bearish on this trade. We were bullish on the trade. Typically with a bullish diagonal, you'll use call spreads. Typically with bearish diagonals, you use put spreads. And in this case, we had a little bit different approach. Now, I think the first time we got in here was back in May. I don't think it was any earlier than May. And what our approach was with this was we bought a long option, and we were a long put option, I should say. And then our purpose for that long put option was just to act as a hedge. And we were selling premium against it over and over and over again. Every week, they have weeklies. We were trying to sell premium against it. So I went through this morning and looked at all the numbers, okay? Because this thing is expiring tomorrow. And I'll tell you, we did not sell the last week because the stock looked like it was going to keep dropping. So in this scenario, we don't want to sell puts against it unless it looks like the stock is moving up or is kind of like making a fresh bounce or making a new breakout or something bullish on the scene, but not peaking and pulling back. So we didn't sell anything against the contract this week. Now, I'm just going to pull this up real quick. And I think we went like 90 days out here. I went through and added up all the numbers for our put spreads. Now, there are a couple of call trades in here because I did a couple of call trades in a different class, okay? But I went through and added up all those numbers here today. And unfortunately, we're walking away with a tiny loss. But it was a lot of work for a tiny loss, okay? Again, it was non-traditional. I went through and added up the numbers, and if I add up all the puts, the credits and the debits, okay, we ended up being about 139 negative or $139. Now, the first time I did it, I had added in the calls with it, and we were looking pretty good. But those calls were not part of our actual trade. So that's why I was like, oh, I've got to pull out the calls, just include only the puts in this scenario. So it actually was quite a bit of work. If we had kind of wrapped up the trade kind of maybe a little bit earlier, we were certainly sitting in a positive situation. We had this decent pullback here where we did not sell any puts against it. Kind of the same thing that happened here last week. So our non-traditional put diagonal is at rest now. Okay, it actually expires tomorrow. We don't have that much left in terms of the value of it because we're using it as our hedge. And so on it, yeah, we paid 17 bucks for it. It's down to about 6 cents. And so it served its purpose as far as being a hedge and allowing us to sell put premium. Again, non-traditional approach there. But some of you had run across it, that approach, and had wondered about it. So it was a good opportunity to try that non-traditional approach. IBM. Looks like we're down a little bit today on our IBM long call vertical. We're up about $480 on it. Let's just take a look. We still have 29 days in the trade. Okay, so we still have plenty of time here. Get the right tickers in here. And let's take a look and see what's happened since we got into this trade. IBM had kind of bottomed out here, and after their earnings, we're making higher highs, higher lows. And so we were getting in after it kind of came back and retested this 235 area, 230 area as a support level, right? So it came down, it was bouncing up. And then since then, what has it done in the trade? It really hasn't done a lot. I mean, the day we got in, it closed at 233. It's only at 236 and change right now. So it really hasn't moved a lot. However, because we've got that short option in there with our long, it gives us some buffer. And that time decay on that leg, actually on the short leg, helps us in this kind of a trade. So we can be patient. We can give the stock some time to move. And again, we've got 29 days in the trade. We're already up on it. So we're going to let it play out. Okay, we're going to let this one play out. Now, Mighty Quinn says, does Thinkorswim have a way to export all of those to a spreadsheet? The answer is yes and no. Let's go back here to our PAN-W, to the account statement. And see, I've got my trade history here. If you would like to export the data, it exports a ton of stuff and not just what you have selected here. okay? Because that was the first thing I did. I'm like, oh, I'm just going to export it into a spreadsheet and I'll have it sum everything up for me. But it pulls back a lot of history. But if you want that, you can do it to help kind of ease your task with some things. Come down here to export file. And then it's going to dump it somewhere. Apparently, I've had it dumping in my Connie Charles Schwab documents subfolder. And then it gives it account statement as of today's date is what it calls it. But if you go and pull it up, and I'll see our other one that was just here. September 20th, here we are. Here's our account statement that I did earlier. We'll just say yes. And then let's bring it up. Where did it go? It's right here because I opened it here recently. And let's go delimited here. Next, finish. We're finally going to get our spreadsheet. All right, here's our spreadsheet. But you can see it has all other trades in it as well. See, so you're down here, we're seeing, oh, we've got something on Cipher, we've got Walmart, brings back everything. So I haven't found a way to have it do a clean extraction for us, but just know that export functionality is there, but it gets a lot. Let's see. Jay Richardson, oh, you and Kevin are chatting, so I won't butt into your conversation there. Just make sure we've caught everything else here. Think we're in good shape. Dora's going to see us in Miami. Excellent. Would love to see you in Miami. Okay. Next up, let's take a look at the market, see what's going on here today, and see if we can discuss here a little bit about, you know, why we're feeling the way we're feeling. All right, here's our SPX. And for our index options trade, I had a bunch of junk in here. And so it's kind of, it looks like I've got scribbles all over my candles here. Okay, it's good because I had some intraday charts I put some notes on that I'm not quite ready to delete. Okay, but we can see SPX, it had been kind of in an ascending triangle type formation, or maybe a symmetrical triangle here. In any case, it broke out. The day that it broke out, we put on the height of the triangle here, and it looks like it could potentially go up a little bit higher. It didn't run up all the way to the top of that height of the triangle. It ran up a decent distance, and now it seems to be pulling back a bit. This blue line is our 10-day moving average, and SPX for this, for a couple of weeks was staying nicely above it. Looks like it's just having a little bit of weakness right now as it's dropping below the 10-day. All right. Does that mean the trend of the whole market's changed? No, it just put in a higher high here, but we're starting to see some pockets of weakness. If we look up the NASDAQ, which is down about 0.58% right now, it didn't put in a new high recently like the SPX did. It had a nice rally, but it didn't get back to the 30,000 area. But it is in a pattern right now of some higher highs and higher lows. It'll be interesting to see here if it bounces at that red 30-day moving average. It's kind of a horizontal level of support there as well. So it'll be interesting to see if it does do a little bit of bouncing. And notice implied volatility has been dropping here, but it is starting to edge up a little bit. Now, what has the volatility been doing during all this time? Volatility, for the most part, we've had some surges of volatility when it kind of went above, say, that 18-ish area, 18, 20, 22, a few little pockets of it, but overall, implied volatility is staying pretty low. And again, looks like it is dropping here, or it's popping here a little bit, right? Got a green candle here, it's edging up a little bit. It's still in a fairly low range. So that really, many traders will look at that and go, well, then I'm going to prefer to do a buying strategy over a selling strategy. If implied volatility were higher, then they might consider doing maybe a little bit more selling strategies than buying strategies. All right. Lucky Mitchell, we are in here. I hope you've been able to join us. Maybe I don't know if you can hear me, refresh your screen. It looks like Lucky was not having luck today, Lucky Mitchell, in terms of trying to get to our class here. All right. Let's look at a few opportunities. We're going to start out here with a chart. And actually, I should mention our trades come from this watch list called Liquid Options. Some things are up on it today. And if I go to the bottom of the list, we've got several things that are down on it today. Okay. This is a list that we feel comfortable with, that has a lot of liquidity, that we can play it on the bearish side. When it's bullish, play it on the bullish side. Okay. We're going to start out here with, let's go to a 1-year chart. And I want to talk about Bitcoin futures for just a minute. We don't trade the futures in this class. However, there are some stocks in the market that are strongly related to whatever it is that's going on with Bitcoin. And you can see for the last year, man, it has struggled. Yeah, it has mostly been on a nice downtrend. Now, it has also going for it kind of a cup and handle type formation, which on a cup and a handle, it kind of hits a peak here, and then it forms this left side of the cup, and then it forms a base, which basically is usually some sideways consolidation. And it looks like maybe it's trying to start forming the right side of the cup. Yesterday, it had a really strong day. You can see lots of volume moved in yesterday, pushing it back up, pushing it above that resistance, and it's doing some follow through today. So a lot of these stocks that have been really weak, that are related to Bitcoin, some of them are starting to gain some strength, starting to see some reversal type patterns in them. So the first one we're going to take a look at here is Coinbase. And I'm just going to go, Coinbase kind of looks like what Bitcoin looked like, right? This is a company that does a lot of cryptocurrency trading. One of the first to really navigate that space. And let's maybe just drop here to say a 6-month chart. Now I had a diagonal resistance drawn in here as well. And yesterday, man, it looked like, yeah, it's trying to pierce it. Not so sure if it really did or not, right? Even though I had that real strong volume and maybe penetrated here horizontally. But today's price action here today gives us the idea that, okay, it really did break through that diagonal resistance, really does want to be bullish. Today at one point, I mean, it gapped up here, pulled back a little bit, and then the bulls just chased it right back up. Okay, so right now it's sitting at a doji. I imagine by the end of the day, it will, well, we'll see what it brings at the end of the day, right? But I am encouraged that the bulls were able to chase back up the bears here this morning, even when the entire market's going down. So this is a stock that is on our watch list. The RSI, which I wanted to take a look at, is making a real strong move. You can see how it was just kind of languishing through here on the RSI, not really doing a lot, staying in a bearish range. And so recently, sometimes we'll look at, say, 50, and if anything above 50, then we start to think, okay, it's becoming a little bit more bullish here. So nice, strong move on the RSI. Now it's up to 61 today. So we are going to do a bullish opportunity here. Do you think we should expect a bigger move or a smaller move? What do you think? Bigger move or smaller move? I have these performance calculations in the columns. They're not that impressive, though. The 1 month, over the 1 month, it's up 7.5%, which we can see. End of July, first part of August was actually negative or sideways. Over the last 3 months, it's down 6%. So this is an early turnaround type of story. And the idea here is I think we can be pretty directional with it. It is making some big moves right now. So we want to hop on the momentum, see if it'll carry us for a bit. All right, so we are going to go bullish on this. And we're going to do a long haul vertical. We're going to work with these September options. And let's see if this still looks good. Stock's at 173. Somebody could, if they wanted, we're not going to end up here, but could do a $5 wide spread. Actually, that's not too bad for a dollar wide spread. Not a dollar wide, $5 wide, excuse me, right? Where we are typically, you want, if you're trying to put yourself in a scenario where you have quite a bit to gain from whatever it is you risk. In this case, we would risk 243 to make 260 now, right? 257, 260, whatever it ends up being here, which gives us a little bit more than 100% return. So we're looking at a decent size return. And actually, I'm kind of liking this. I was going to go for a different strike price from where the stock was earlier, but it's kind of adjusted here. This might turn out to be a nice little trade for us. Does the stock need to do that much? Well, we want it to go above 175, which I'm trying to put my mouse exactly in that area. It's not asking the stock to do a whole lot. If somebody wanted to be more aggressive and shoot for this 180 up here, we've got a month to do it. That wouldn't be a bad target either. I would say it would be a little bit more aggressive of a trade. Let's see how much more aggressive that might be. We would be risking 425 to make what? 475. 575. We would be risking 425 to make 575. And so if somebody were more aggressive or wanted to trade it more aggressively, you could do that. In our case, we are going to opt for the more conservative one. All right. In our class, we can risk up to $2,000 per trade. So let's calculate how many contracts we could do here. Let's fix it in here at the 228. All right, come back, calculator. So let's go 5 minus 2.28. It says we have 272. I think when I was eyeballing that earlier, I told you wrong on the math. Okay, 272. Risking 228 to make 272. That has actually, numbers wide, fairly aggressive. Okay, so I'm going to write that 278 number here because that is our max gain. And that light blue color is hard to see. So let's change it to something. I'm just going to pick a dark color. There we go. All right. That's going to be our max gain, and our max loss will be 228. So how many contracts can we do? Come back. We're going to take our $2,000 that we're willing to risk in this account. We start out with a $200,000 account. Let's divide that by 228, and that says we could do 8 contracts. Great. We are going to do the 8 contracts here. Oops. Get on the right number. Oops, a little too far. There we go, 8. All right. Now, there's a lot of different ways that we can determine an exit, right? We can do it based on technicals on the chart. We can do it based on profitability of a spread. Last time we were together, we based it off of targets on the chart, okay? This time, and we could do that again, we could say, well, maybe the next area it's going to go to is that previous resistance up here about 189. We could do that. Or we could say, you know, if we get a chunk of that spread, let's get out. And that's the approach we're going to take on this one. So we're going to do a first triggers. Let's see. Let's do first triggers OCO in this one. And we'll create 2 opposite orders. And we're going to configure them based on profitability here. So here, if we can get 278, 278 is our max gain. We're not going to go for 278. A lot of you in this environment have liked taking 50%. When I quiz you and I ask you and you answer in the chat, one thing you've been telling me is 50% right now, I'm kind of happy. So let's take 50% of that. So times 0.5. That says, let's go buy it back at $1.39 plus 2.28, 367 is where we would want to get out. Now, what about an exit on this? Sometimes we haven't been putting in exits, but it's kind of saved our bacon when we have put in some exits. Where would it make sense to say, ooh, this thing isn't breaking out anymore? Now, it's possible that it could maybe come back and maybe retest this diagonal resistance area as support, and it would still be in an uptrend. But if it had a significant break below it, then we should be concerned. Okay, so I'm going to say today the line is about 156.15. Let's go a percentage below that. Let's go 2% below that line. Give it a little wiggle room. So we'll multiply that by 0.98. And I must have missed a decimal there. Let's see. No, that's right. 153.02. Where's 153.02? 153.02 is about where my mouse is. Okay, so it is a little bit below that diagonal line as it's sloping where it is today. Okay, so that's what we're going to do. That was 153. What was the change on that? 02. And oops, wild mouse, come back. Just let me make this a darker color without the mouse running around. Okay, just dark. There's a dark color. All right, let's go plug those values in. So we're going to get out based on a little bit of technicals for the stop loss, a little bit of profitability on the top side of things. We don't always have to do them the exact same way every time. I like to vary it, okay? Yeah, I do like to vary it depending on just giving us some variety in the setup of the stock, what looks like could potentially happen. All right, so we've got our 367 here. This, we're going to mark it as a market order. Both of these are going to be good till canceled, but then we're going to put the price of the stock in here. Okay, so go to the conditions, click on the gear. And so if coin gets less than or equal to 153.02, then we want to be out. Okay, 153.02 gives us quite a bit of room from where the price of the stock is right now, but it is an expensive stock. And the idea here would also be that we could move up our stop loss. Stock moves significantly, great. At the end of the day, we could move our stop loss up, keep ratcheting it up. Make sure that the arrows are going the right way, is less than or equal to, and that's what we want on this. All right, let's go ahead. Let's hit confirm and send. We're going to send it to our class grouping. All right. Alec, yep, it was really 272. Thanks for catching that for me. Chris says, well, hopefully the trend will be our friend. Well, that's what we're counting on, that technical principle. Not guaranteed to go up. It's going to vacillate with whatever Bitcoin's doing. But we already kind of took a look at that Bitcoin setup, and maybe it was looking to create that cup and handle pattern and build that right side of the cup. So we'll see. All right, next up. We're going to do a bullish one here. All right. Walmart. Walmart reported their earnings this morning. I didn't go through and read the report, but we have been concerned about a weak consumer, right? That inflation is really playing a role in decisions. And we can see Walmart's down here almost 10% so far today. Now, I went back to see, well, you know, how low could it drop to, right? Where might be the next place for it to drop to? And I went back a couple of years on the chart and came up with maybe some support right around here, right around $2.99. Now, when I looked at this earlier, it hadn't dropped nearly as far as it has now. It's really dropped quite a bit more. So we might have to lay this out a little bit different, but there could be some support here, but it's not guaranteed to actually go just to there, right? We might have to go to another level down. We might have to go to, let's maybe take this level here. It's a little bit busy. Looks like maybe that was an old support area here. You know, maybe it drops to the 94-ish area. We'll see. Okay, really, that RSI, look how steep that is. Oh man, it is like ripping down. That's showing a lot of weakness on it. Okay, that is the case for the bears. Okay, we're not going to use this 99.54 as a target, but we could. If we wanted to do a conservative trade and say, oh, let's get out at that target, we could absolutely do that. I kind of want to see if it pierces there and continues to drop a little bit more. So on Walmart, we are going to set up a bearish trade. We're again going to use these September options. 20 to 40 days is a time frame that a lot of traders like to set up verticals in. So this is just kind of right in the middle of that sweet spot. And on this, I was looking to do, let's see if this still looks good, the 105-100 spread. So let's go ahead and let's hit sell vertical. And I'm going to kind of, we'll lock it in there about 230. Okay. How much does the stock need to drop? Just to 100. So it has about $3 more to go before we start getting into an area that's fairly profitable. And that's really what we want to see by options expiration. We don't plan to hold it to all options expiration, right? We don't want to necessarily hold on to it that long. But suppose it comes down to this support area and it just kind of looks like it's found support. We might end up getting out a little early, taking profits there. Okay, that could be a possibility. What if we're wrong? Let's set up a point here where we know we are wrong. What if, many times when we have gapping candles, the top of the candle or the bottom of the candle will act as a support or a resistance. So in this case, I would come here to the high point here on Walmart. We're just going to call it, say, the 107 area. This should act as resistance. Not guaranteed to. Sometimes the midpoint of a big candle, which I would say this is, sometimes it'll act as resistance or support as well. So either spot it could be. However, if it goes above where its high level is today, say around that 107, I would say it's definitely reversing. And we would want to use that as kind of a fail-safe, get out of here. This thing was reversing on us. Okay, so that's 107. Come up to this row where it's already blue. 107. That's going to be our stop. And for our target, let's do again the 50%. We can get 50% of our max gain. All right. Let's come back here to the trade tab. We're risking $230 on the trade. That's about the same as the other one, isn't it? I think we can do 8 contracts here. And this was intended to be a long vertical. Came in at short. Let's okay. Going to be a little bit more than 230. It's going to be 234, 230 something. Okay. We are going to do the long put vertical. We're going to do 8 contracts. That shouldn't have us risking more than what we should. Let's do the same thing again. We'll do a first triggers OCO. Let's queue up an opposite order. And we need a couple of those, 2 opposite orders. All right, first one, let's put this for our target. If 232 is, let's lock it in here, is our max loss, then what? 272 is going to be our max theoretical gain. That's unusual that it turns out to be the exact same amount. Again, multiply, well, actually, no, we're not going to multiply. 272 is our max theoretical gain. Let's multiply it by 50%. That's not right. That's a 0.35%. Let's try that again. 272 times 0.5 is $1.36. So if we get $1.36 of our profit, we'll be happy. Let's add that to 2.32. This says buy it back at $3.68. Okay, if it gets to that point, we will be happy. to buy it back. Put that in as a limit order and good for the day, or rather good till canceled on this. And then this one, we're going to do the same thing. We're going to do it based on the price of the stock. So we'll make it a market order, which means it's not guaranteed a price. We don't know what the price of the option would be when this circumstance hits. If it gets less than or equal to, and that number was 107. Let's do this. Let's go 107.05 in case it just goes a little higher. We'll give it a little bit of latitude. Okay, if it gets that high, we need to get ourselves out of the trade. If it's this case, it needs to be a greater than or equal to. There we go. Get that the right direction. Because in this case, if it goes up, we want to be out. We're going to send this guy on. We're going to put it out in our bucket. We're going to check this every single day. We're going to see if we need to adjust the stop loss. We're going to see if we can maybe lock in some gains if it makes a big move for us. We might not just settle for, say, 50%. Okay, we're going to kind of play it by ear, but these are going to be our initial exits that are predetermined, that are not emotional. They're just based on logic getting into the trade. So we did one bearish trade on Walmart. We did a long put vertical. We did a long call vertical on our first stock, which was Coinbase. So those are the two that we're going to be focusing on. Sam wants to know, curious why 3 to 6 months down the road is out of order on Walmart. You could go out that long. If you wanted to go out longer in time, absolutely you could. We're not going to in this case. Yeah, it could drop for a while. We just don't know. We're trying to just maybe trade a small amount of price action and get a decent return using options is really what our goal here is. Okay. So yeah, if you wanted to do it longer, absolutely you could. Now, I do hope you're all subscribers to our Trader Talks YouTube channel because it makes it so much easier to find our content. What's going on here today? After me, we'll have investing in dividend stocks with Cameron May. He's going to take that session, and then James Boyd will be up. But if you're looking to see, gee, when is Barb going to, teach next? Or you want to go back to one of the playlists for our classes, man, it just makes it really easy for you to be able to do that. Okay, so that is what I'll point out to you there. And I did a quick little video. We just barely posted it. I'll point out here to you. It's only a 6-minute video, and I'm teaching you how to do a minor edit in ThinkScript to kind of build your confidence in working with ThinkScript. So that is a new one out there for you this week. All right, you guys, take a break, refresh your beverage. Barb, thanks so much for helping me in the chat. She said there was not a survey there today. So if this was helpful to you, hit the thumbs up on the like out, or on the way out, the like button. Follow Barb and I on X, Barb Armstrong CS, Connie Hill CS, and then you have a link here to go to our playlist and join our subscribe. Hit that blue subscribe button in the bottom right. All right, you guys. We'll check up on those trades next week. We'll see you then. Bye-bye.